Good day, traders. 1 minute mindset reset. Today we're talking about trading your plan. Just had a fantastic workout. It's the beginning of the week, and we've had lots of movement overnight in London, the London session, and coming into the US session, we had yen cross pairs, we had US dollar crosses, we had Aussie dollar on the run, day one runner, and right away lots of movement on the Aussie crosses, which eliminates them out of my looking at them, because when you get a day one runner that's going that strong, you'll hear me repeat this, don't counter trend a day one runner. We had major red news on the calendar at 10 a.m. New York, and one of the easiest things to look for is either low-hanging fruit or continuation trades, trend trades. So similar, very same model, but sometimes we get low-hanging fruit that have already broken out of days ranges. We saw that with a couple of the US dollar crosses. And we also see continuation trades on the inside. So gold had failed. Thursday's breakout longs had failed on Friday, but they took out the low of Thursday today. Right off the bat, they broke Friday's low. We had breakout traders triggered into the market. We have shorts in the market. They made a low. They continued to go lower and then reversed during the London session. The London session put a higher high in place on top of the Asian high of the day. Higher high on the inside is the setup for the dump and pump. They moved higher into the US session in the beginning of the US session. The US session opened up and went a little bit higher between 50s and double zeros. Higher high on the inside is the setup for the dump and pump. So we had a dump on the New York open to the low of the session, and the continuation trade back to the high of the day. They trapped longs back inside, stopped them out if they didn't take any money off the table just prior to the major red news, and that continued our move back towards where the money was at the high of Thursday's high of day. So again, when we get into a day one, a Monday, a new day of the week, anything can happen. We can flip the book, we can get reversals, we can get trend trades. The number one thing to do is to stick to what you know or do best. And there was a first bounce entry after the news with gold. So thesis was they were going to go back to the high of Thursday, and major red news exploded long, started to pulse again, 15 minutes, putting in a high. They came back down, consolidated sideways into the moving average, and then continued the move back up towards the high of Thursday, through the high of the day and towards the high of Thursday, where the breakout traders from today's shorts were caught. So some traders were looking for a short opportunity. They thought Friday was first red day. Remember what happens. You can have a first red day, and it blew off in Asia. Right away, we're taking out the low of a day and the low of Thursday. There's your first red day trade. It shorted from the high of the session and went lower. You have to study breakout trades. So if you have you're using 1 hour charts, 15-minute charts, find the breakout. Classical charting has a breakout candle. So Turtles, Schabacker, Edwards and McGee, those geometrical structures have a breakout that completes the pattern for an entry. It's a breakout candle. Mark off your breakout candles and understand when breakouts fail and when they pull back and continue. So all those shorts were trapped. We don't know what's going to happen until they set it up in the US session. They could have went down 75 pips and continued to go lower, but they made a box. Then they went down to the New York Open. From inside, there was 25 to 50 pips that traders could have tried to get shorting that. Not quite 50, but then bang, right away they locked in the low just below 50. Again, major round numbers, 50s and double zeros against the upward moving market on the reversal trade back to the high of the day. So stick with what you know. There were several traders who hit the pound and the euro yen for shorts at the high of the day. They put a high in place. So compare the breakouts on the pound yen, euro yen at the low of the day with gold. We have volume trapped on day one outside of the low of the day. That potentially now can become a day one going back up towards the high of Thursday. So we have day one now, day one with trap volume at the low of the week. Day one, tomorrow's day two. Whereas the pound yen, euro yen triggered the lows before reversing inside, but we don't necessarily have trap volume below the low of the day. So this could still be, conceivably, we could have Thursday or Friday as our day one at the high of the week for those pairs. So again, it's a Monday. Stick with what's simple. Stick with what you recognize the best. We've got lots of news on the calendar this week. We've got non-farm payrolls on Friday. Focus on simple trades. If you're not sure, don't trade it. Or if you're just looking for that, 25 pip move, pound yen, euro yen, they started to go before major red news. There was no real volatility on those pairs, but if there was, some of those traders who were in prior to the news may have got wicked out. It's just one of those decisions you need to make as a trader. I don't trade before the news. Somebody asked me that today. I had 30 minutes before the news was coming out. That trade only took 10 minutes. The second tap to the high took me out, because once they go a second time at the high of the day, that's right away. You've got to be locking in your take profit, because if that market fails, now you've got a high of day short that came back into those longs right away. Easy 40 pips. Simple way to start the week. There was a first bounce entry back in line with the original thesis. We're going back to the high of Thursday. Lock it in, get off the screen. Oil, great low of session, second hour trade, right back to the high of day after a $5 gap over from Friday night into Monday morning. Congratulations, there were some traders who shorted that first hour. There were traders who went long second hour. A beautiful trade for both. So I know we're going to get lots of volatility. We've got uncertainty in the markets. They're talking about interest rate changes towards the end of the year. We've got dollar pressure. We've got oil, gold moving, lots happening. So there will be best trade setups happening everywhere, traders. Again, step back, be patient, let the market set up. Have a thesis, look for the easiest setups to recognize. Don't try to counter trend a day one runner. We talked about that. Aussie dollar, eventually it came back 25, but again, where's the easy money? That's what you want to focus on. So keep it simple, 1% better every day. Focus on where we're going to be at the end of the week. This could be setting up for a large move on Friday for payrolls. Who knows? But keep it simple. Day one, day two, day three. Wednesday could be the beginning of a new day one count heading into Friday. Day one, day two, day three, non-farm payrolls for a potentially large move and maybe a first bounce opportunity. So could be some big moves at the end of the week that are simple and easy. But stick to your best trade setups, traders. Have a great day, and may the markets go with you.